Hello guys, in today's video I will talk about the stock market having an excellent week, how a lot of jobs were created, the oil market is still being affected, Amazon decided to buy an autonomous driving company, and Uber could close a deal with Postmates. Also, I will analyze FedEx earnings report and give you guys my expectations on next week's earnings report for Paychex and Walgreens. I would like to ask you guys if you could gently smash that like button since it really helps my channel out. The S&P 500 had an amazing week with 3.69% gains since Monday, the Dow Jones 2.54%, and the winner here, the Nasdaq, with 4.48% in a single week. The stock market ended the second quarter with an average biggest quarterly rally since 1987. Obviously, that might have been because of the stimulus packages, the economy reopening, positive trends in the virus, and hopes for a vaccine sooner than expected. The thing is that we still got a huge path ahead. We still have no certainty of any vaccine and the cases are increasing. We need a vaccine to control this pandemic, and if any of the proposed virus treatments fail, we are going to see either a huge drop or a lot of volatility in the market, which you should be prepared for. And also because this is an election year. Analysts are expecting the second half of the year to be a lot choppier because of the perceived disconnect between the market and the economic recovery, which could be completely true, but it is also true that the stock market represents mostly big businesses, and big businesses are bouncing back after reporting better earnings than expected. Let's talk about what several companies have done. Last week, I forgot to talk about something very important. Amazon decided to buy Zoox, which is basically an autonomous vehicle company. This might be Amazon's biggest and more opportunistic deal ever. Why? Because with this, they will turn their delivery fleet into autonomous vehicles, saving a lot of money. Not only that, they could easily develop their own ride-sharing autonomous service and start competing with Uber, Lyft, Waymo, which is Google's self-driving car project, and also with Tesla. According to Lisa Gunning, an Amazon spokeswoman, said delivering products was not the reason for the deal. I think this is huge for Amazon. I mean, they were already a huge and well-diversified company, and with this, they will improve their transportation and will be able to enter new markets as well as the ride-sharing industry, which is a very competitive one. Obviously, we will have to see how they evolve and continue with this project. Talking about ride sharing, Uber might get into a good deal with a food delivery company called Postmates, which I'm sure you all know who they are. Postmates currently has three options: either going public by themselves, selling to Uber, or merging with a SPAC company to go public. These three options have its pros and cons. If they decide to go with Uber, both companies will benefit since the food delivery industry is very competitive. Normally, these companies spend a lot of money in research and development and marketing to be able to surpass other companies. We know that there are a lot of options when thinking about delivering food: Grubhub, DoorDash, Uber Eats, and other small companies trying to enter the industry. Uber Eats noticed that with quarantine, their food delivery has been exponentially increasing and are trying to grow even more in that area. That is why they decided to buy Grubhub, but after Grubhub canceled the deal, Uber turned its attention to acquiring Postmates. So if Postmates decide to go with Uber, both companies will save a lot of money in research and development and marketing. On the other hand, if they decide to go public by themselves, they will have a harder path because of the competition. And remember guys, that these companies have been struggling a lot to be profitable. Before continuing with the video, remember guys, I opened a Discord chat completely free. I will leave the link down below in the description for any of you that may be interested to join. Also, do not forget to get your 2 free stock with WeBull, link down below in the description. Now, in the month of June, there were 4.8 million jobs created, which is better and much stronger than expected, and the unemployment rate fell to 11.1%. Since every single sector improved. What this tells us is that the economy is going back to normal faster than expected. Still, new jobless claims remained at a little high with 1.42 million Americans last week. Leisure and hospitality accounted for almost 40% of the total job growth. My fear here is that as the virus cases keep increasing, a lot of restaurants, hotels, and all the hospitality sector could decide to close again, and that would be another huge wave on unemployment. I do have to say that obviously we are nowhere near to where we were before the pandemic, but it's a huge comeback that depends on a healthy economy. In my opinion, what all this means is that the shutdown was temporary and people are getting their jobs back. Still, virus cases keep increasing. Here in Florida, we had more than 11,000 cases in a single day and more than 57,000 in a day in the US. People need to continue with social distancing because yes, we are seeing a huge improvement in death on a daily basis, but I am concerned that those numbers could start increasing with so many cases and we will go back to the beginning. So yes, we are seeing a huge improvement in the economy and hopefully it continues like that. But the increase in cases is a little bit concerning for everyone because if places like restaurants and other companies already had to cut their occupancy by 50%, they are not making as much money as they should be. And if we decide to close again, we will see another huge wave of business closures. Now, the oil market. When the pandemic started, the world was burning less oil because of the world being shut down. But oil producers were pumping more than ever, which led to a huge crash in oil prices as soon as the shutdown started. Then in April, we started seeing a recovery in the price, but never got to where it was before the pandemic. So last week we saw another drop in oil prices again due to the increase in virus cases, since US oil and gas firms do not expect global oil consumption to return to its normal level as it was before the pandemic. They are expecting to see the normalcy back by late 2021 or even later. On June 30th, Royal Dutch Shell decided to write down their assets by up to $22 billion because of lower energy prices, and weeks before them, BP decided to write down their assets as well by $17.5 billion. When a company talks about writing down their assets, means that they are reducing their assets value. Also, BP, Chevron, and Shell decided to reduce their workforce as they expect oil prices to remain low. Because of those expectations, Shell decided to cut their dividends and BP decided to cut their investment plans by 25%. In my opinion, all this is causing a fundamental change in the entire oil and gas sector since their earnings are under a huge pressure. Still, surprisingly, oil prices did have their best quarter in 30 years because of the fast recovery, just like the stock market. Now, last week I gave my expectations for FedEx earnings report. They reported a revenue of $17.4 billion, which is a decrease of only 2.5% in comparison with the same quarter last year, but still they beat expectations. Also reported a net loss of $334 million. To be honest, I did not expect a loss, but definitely expected a decrease in net income because of the increase in expenses during the pandemic. For next week, we have several companies reporting earnings, such as Paychex, Levi's, Simply Good, Bed Bath & Beyond, Walgreens, and more. For this video, I will give my expectations on Paychex and Walgreens. First, Paychex, ticker symbol PAYX. It's a company that provides human resources and payroll services to different kinds of small and mid-sized businesses. I do expect them to have a decrease in revenue, but to do better than what analysts are expecting. Remember, I said at the beginning that June jobs numbers increase exceeding expectations, and Paychex is a company that benefits from that. Then Walgreens, ticker symbol WBA. During these past years, their international business has been decreasing since their sales are down. Also, they have had a slowdown in their company and are facing a huge competition from Target and Walmart since they have been expanding their pharmacy businesses. For Walgreens, I'm expecting them to have a decrease in revenue and in their net income because of the slowdown that they've been facing lately. I really hope you enjoyed this video. Do not forget to subscribe and smash that like button for the YouTube algorithm. Stay safe, guys. Stay home. Thank you and see you next time.